Hello, everybody. Good morning, good afternoon, good evening. Welcome, everybody, to HF Markets live session. Wednesday, 26th of July. We are getting deep into summertime. Still, these are not the classical summer. These are not the classical summer sessions. There's really a lot going on. This is crucial week for many reasons. We have central banks, we have a lot of earnings. So yeah, we can start directly from that. For example, while waiting for people to join earnings, the last names to join to report earnings have been Google and Microsoft last night. Both, well, both no. A key part for both of them has been the cloud section of our business. Google bet it on it. This is the second source of revenue for Google. First one, as always, all the ad and search business. Hi, Mr. Satori. How are you? All good. Thank you for the nice words. Best broker. Yeah. Well, hopefully it's good for that clients say this. So yeah, the second source of revenues, and it's growing. It's related somehow also to the growth of all artificial intelligence. So where a company can develop their models on clouds, getting advantage of this infrastructure, and yeah, without having to build expensive, difficult systems by their own. So yeah, Google bit estimates, and it was up 6% in after hour yesterday. I don't know if you know. I'm telling you right now. After the close, there's a thing where retailers cannot really trade. It's called gray market or after hour or pre-market. Right now, pre-market opens at 4:30 in the morning AM New York time, and it's open right now. Google is right now plus 6.07%. Will, as for now, it could open at 129.63. Right. Beside that, so we had Microsoft that showed slowing cloud revenues. In this case as well, it's really interesting to see Amazon as well, because Amazon, I don't know if you know, but a big chunk of not its revenue but profit come from AWS, Amazon Web System. Anyway, it's cloud infrastructure. Believe it or not, for many years, Amazon has not. You cannot hear. Yes, you can hear very well. Happy. Yeah, let me know if you cannot hear. Anyway, Microsoft slowing cloud revenues -3% last night in after hour. Let me check for you what is going on in pre-market, just so that you can know what to expect. Right now is down $12 per stock, -3.42%. So okay, we are still 2.5 hours away from the open, but at this point it would open at 339, let's say, dollars. Okay, and so on. A lot of earnings during all of these days. Yesterday we had Visa as well. Today you're gonna have Coca-Cola, AT&T, Boeing, Meta, Facebook after the close, and so what what we already had. Let me check. Another thing that I have been calculating this morning for you. People sometimes try to just to bet what is gonna happen. I'm going long on Facebook. I'm going short on that. Hopefully, an exciting, a surprising result and a big movement. Yes, this actually happens just for the big names that are gonna report. Well, some of them probably have already reported, by the way, when I'm speaking. But Meta will report, for example, at the end of the day, after the close. So use some options just to calculate the implied movement. How the option market thinks could react the stock after the earnings. Pay attention with Meta because the implied movement from the strategy is of about 8.2%, 8%, let's say. So it could jump. This means it could, according to option dealers, it could go up or down by that percentage, and many times it makes sense. So be aware. Facebook, now we will have a look at it as well. Facebook has actually ready. Yeah, you know what? We will start having a look for example, to this company. Anyway, the biggest implied movement is actually for Meta after the close, 8%. AT&T implied movement 1.5%, Boeing 1.8%, no sorry, Coca-Cola 1.8%, Boeing 3.7%. So here you should have a taste of where the biggest volatility will be. Tomorrow before we open McDonald's, MasterCard. So on the earnings side, a lot of movement on the earnings side, and yeah, now we will have a look. We will have a look to some companies. Yeah, let's start from here. Come on, because there's a really lot of stuff that have fed today. Actually, today is Fed Day. So probably this is a thing that generally would be very interesting for everybody. Fed's gonna hike another 25 basis points. Its official interest rate to a band between 5.25% and 5.50, and tomorrow we'll have ECB. Will rise again. That's something very interesting to say on ECB, but yeah, let's go little by little. Okay, FANG. Wait, just have a look, yes, at these two. At Alphabet, it would be at these three, sorry. Alphabet, Google, Microsoft, and Meta. Good morning, Mohamed. Welcome aboard. Welcome on board. Nice to hear you with us today. So let me check if you can see. This is Microsoft. We are starting from, I'll select all as a first thing. No, let's start from Meta. Let's start from Meta because it will report tonight. And as said, implied movement as per the option market, an implied movement is around 8% right now, and 8% of 291 is something close to $20. Okay, we will go with GBP dollar in a while. Hold with me. We will try to be fast with as I have started with stocks being earnings season. After this, we'll have a look at these three stocks, and then we'll go on to the Fed and with some majors, some forex majors, minus crosses, whatever. Hold on, give me 10 minutes, okay, Mohamed? Sorry for that. Just not to interrupt what has been started. I was saying, Meta implied movement from option is around 8%. That means around $22 movement, having closed at 200. Let's try to be a little bit more accurate. Meta has closed at 295, 294 and 3, let's say. So a $20 move, it means that it could open either close to 275 here, and this will be below this trend line that I have drawn, or it could, in the case the surprise was positive, it could even open close to the tops. Okay, basically option dealers are prepared for some kind of surprise, after this huge rally. This is the rally this year for Meta. It started its run at the beginning of the year. Here we are around 119, 120, and it's now $170 above that. This is a huge rally. Let me quantify it. Okay, I get stuck here on the platform. Anyway, okay, here we go. So it has rallied since 28th of December, 154%. Has rallied. All right, so to be honest, after such a movement, even some decent results could give place to some profit taking. Let's have a look very, very fast technically. You see the rally finally, I won't say that it filled the gap. It was a gap left in a previous earnings session. This was the February session of last year. It was a huge gap, a huge disappointment, and so on. Anyway, it has rallied up to 320, it's going down. This trend line is incredibly steep, RSI is starting to diverge. Also, the histogram here marked has gone down. Oh no, this is not what I want to do. Here we are, and the distance with this is the 200 moving average is huge. So yeah, till we are above this trend line is a good sign, but really it's real steep. It's really steep. All right, here you have it's very long term. Here I just draw some basic mid long term levels. Probably some days ago I did this. So in the case the price were to be pushed down for some consolidation, we would need to have a look to this big range area. Let's say 250 is a very important level. I'm not saying that it's going so much down, because 250 it would be a 15% drawdown. I'm not saying that at all. But just for you not to panic in the case of a bad result. Anyway, the trend line is a clear indication, and the recent highs is the other clear indication. Above 320, a close above. It's always good to always wait for the close for deciding what a candle meant, what a movement meant, if it was a real breakout, if it was whatever it is. Okay, a clear close, and the capacity to stay above will open more room to the upside. You see, the present high was 385, yes, 350 is a very important level. All of this, obviously, is very long term. Microsoft, we said that it's gonna open a 3% at least. As for now, it's minus 3% in pre-market. Minus 3% has closed at 351. Minus 3% is $10. Yes, to be accurate, right now it's minus 3.5%. It's $12 lower. It would open at 339 in just 2 hours. Look where is 339. Very close to this trend line. To the steepest trend line. This one is steep as well. It's the case for all of the company, at least of this big mega cap techs, better said. All right, the rally for these guys as well has been huge, not so huge, if I'm not wrong. No, yes, I'm not wrong. As Facebook, plus 58% since since the low on January the 5th. But yes. Okay, last one, and then I will stop with corporate trends because we have these questions on forex. I need to start with cable, GBP, dollar, as Mohammed asked us. The last one, okay, the last one was Alphabet. Alphabet, Google was one of the mega cap that performed the worst till now. Okay, but still within its rising channel, as we have just seen. It's gonna go open. Look how pre-market after the earnings, how things happen. Right now it's plus 6.4%. It should open at 130.10. Oh, right now it's gonna open above its previous 2023 highs. I was writing a small stuff about Alphabet, Google, a couple of days ago, and well, without entering in numbers, fundamentals, but just what analysts polled by Refinitiv or Reuters, I don't remember anyway, Refinitiv is owned by Reuters, were saying 41 analysts polled, if I remember correctly, more than 35 were a buy and the other were a strong buy. Okay, so quite a lot of optimism. It has underperformed because of some previous problem, blah blah, and yeah, and so on. Technically, yeah, above 130, there's some room probably to get to the upper bound of this channel and to this level close to 140. All right, but now let's move. Let's move to central banks. Let's start with cable, as there's a question from Mohammed. Yeah, asking and waiting already. Been waiting for some time. FX main. High dollar, and let's have a look at the cable. The cable here you can already see one thing. What happened to sterling? What happened to the sterling is that inflation went finally down a lot last week. If I don't remember, 2 weeks ago. Sorry, I lost a little bit the perception of time, and below 8%. The headline, yeah, I would say yeah. And so the bets for an extreme aggressiveness of the old lady of Bank of England has pulled back a little bit. At some point, traders were pricing the possibility of 6.5% by March 2024, and somebody even putting some bets, meaning buying futures. Up to 6 Sonia futures. No, well, Sonia is a swap anyway. It's 6.75 now. The idea is that the final rate will be well below 6% once again after this inflation data. Remember that some time ago Sunak and his government were almost promising or hoping for inflation to go down to 5%. It was just 3 months ago, I would say, inflation was still at 10%, and that looked quite ambitious at the beginning. There were no chance. It looked like there were no chance to get there, but well, prices are going down. So what happened after the CPI data? After this change in the mood, we had quite a lot of down sessions. But to be honest, it's not only on cable, on GBP against dollar. It has been the negative sessions. The positive sessions have been for the dollar and have been for the dollar for a lot of currencies. Here you have euro dollar had broke above 110.5, 111, pushed higher till here. You see we had this channel. We noticed that while euro dollar was staying in a very tight range, of no more than 5 big figures, 105, 110. It has been one of the, for months this year, it has been one of the tightest range since 1970s. Anyway, yes, since 1970, I think I was about to say ever, but anyway, staying in a range from, you see, basically 105 to 110, 111, has been very compressed. Has been very compressed. It broke to the upside. Now testing with 110.5. That has been the previous high this year a couple of times. So here we must pay a lot of attention on all of this currency against the dollar, because first of all, because all the central banks now, today the Fed, tomorrow the ECB, next week there will be the Bank of England. Okay, so it's and we are in a pivotal moment. We are in a pivotal moment. We are very close. We are very close, I would say. Nothing is certain to the end of the cycle for many of these banks. It looked like the Bank of England was the one more far, but we will see. Also, well, I wrote a little thing about inflation the other day, because there's a lot of optimism. Yeah, inflation is going down, but recently, last couple of months, commodity prices have started to go up broadly. Many geopolitical stuff, OPEC Plus cutting production, now the Green Deal, Russia, Ukraine, and so we will see it in a while. Many things, many commodities are up a lot. Well, oil 17%, crude, gasoline, RBOB. Well, there's somewhere we don't offer, but. Gasoline is up 45%, if I'm not wrong. Anyway, prices are going higher. Input prices, let's see if this will reflect in the next month, by the end of this year, on prices again, despite the optimism. So yeah, about cable, it's still very healthy. Hi, Nicholas. It's still very healthy. The uptrend, you can see, has not been broken at all. We have some big long-term resistance, so especially with this 130, basically 130, and the next one being 132, 43. Okay, but I'm always talking about long-term. So there will be. I don't know. It will be difficult. It will depend on on how banks will react, how central banks will react. The differential, the interest rate differential at some point should be in favor of sterling. If right now, sorry, a second. Right now, there's no clear differential in interest rates between the Fed and the Bank of England, being Bank of England at 5%, the Fed between 5 and 5.25 last days. I think the official rate was fixed at 5.08, something like this. So anyway, for your trading purposes, for now we have a clear uptrend. So it has weakened. We had a rebound just these days at close to 128, 28.50. So for now, we could use this brighter green line for sorry. Yes, I will show this. This is view was many minutes ago, but I was forget about this picture. Yeah, we must use this as for short-term technical analysis. This green line as a reference, and we probably, if we want to have some more reference for our short-term trading, let's move to the 1 hour. To the 1 hour. In the 1 hour, so in a shorter time frame, I see these two chances. I suppose, I mean, cable has already been attacking this area. 129, 129.30 probably is an interesting area. You see, 129.30. This is 1 hour chart. I would not even be surprised if it could move even a little bit higher. I mean, if it breaks, for example, this area 129.30, this area, it could move. It could even move a little bit higher, probably to a 129.80, 130 area, and here there will be a big resistance. All right, here there will be a big resistance. So yeah, on the short term, what you could trade. Yes, trade is the right word. This kind of trend lines. If you don't have a longer term perspective and not really interested in what banks are doing. Another thing. Tomorrow we will have ECB, and then Nicholas, I will move to New Zealand dollar, as you asked. New Zealand dollar, I'm sure I haven't checked it this morning, but I'm sure it had moved quite a lot because we had inflation in Australia. It eased once again, and yeah, Aussie made an up and down, pop, and I'm quite confident that also the New Zealand has made that up and down. All right, but yeah, one thing at a time. Let me just speak a little bit, few seconds about the euro dollar. Sorry, Nicholas, because tomorrow we will have ECB. Most probably ECB will hike rates again. Yes, it will. But what's the problem? The problem is that the data in Europe are coming in really horrible. Since some time they're coming in horrible, especially in Germany. Manufacturing went in at 38 on PMI manufacturing on Monday. 48 is one of the lowest levels since after 2000, the great financial crisis, after 2009, and after the COVID crisis. It's an horrible number, but generally, also in France, all PMIs, services, manufacturing, composite, obviously in Germany. In Europe as well, only the services are still in expansion. Industrial production is awful. Business climate, IFO business climate was than expected on Tuesday, and so on. Data are horrible in Europe. Why I'm saying all of this? Because some out there, some ECB members started to seem less hawkish than usual, and while the first cut for ECB are planned, at least the market is. Sorry, I don't remember everything. I don't remember if it's March or May or June. Let me check where I had put it. Yeah, for June, A cut by Euribor futures is clearly priced in 100% before June 2024. There's high odds also, I would say, around, I don't know, I haven't checked it today, but above 60% good odds for a cut before March. But there has been a lot of activity on on option markets. Sorry for talking about this. Well, the calendar spreads selling around September, October. And this is the kind of thing that option traders try to do when they expect a move. Meaning that maybe ECB will be one of the first to blink, and probably will not pre-commit for another hike in September tomorrow. Will show itself data dependent, and so meaning that that in the future months euro could be one of ill, like Germany is considered ill out there, and where is the case that could easily, first of all, we have this trend, the green one, that is passing lower 1096. Let's say right now, today is passing 10930. Sorry for my approximation. This is horrible to be so approximative, but I mean, we're just speaking here about a lot of different instruments. The time is what it is, and that's it. And after that, I will also consider the slower pace of price increase, of rate increase of euro dollar. So, well, I don't think 109 or even 108 are out of the course in the next month. So, Nicholas, sorry for making you wait. Yeah, let's go on New Zealand. Okay, technically it's nice. Technically it's nice because it's cleaner than our currencies. It's similar to the Aussie, and like the euro, we just talked about it. It has been compressed in a range for months since the beginning of this year, going mainly nowhere but staying between 0.61 and 0.63.8 during all this period. 0.61 and slightly below was a good entry point for longs, while 0.64, let's be 63.75, a good entry point for shorts or for the profit taking, and so on. Besides of that, okay, the long end structure, you see the downtrend, but let's focus on this green line that it's what could be considered, well, not really downtrend, but at least we have some references. Okay, we have some references because from this high and joining it, connecting it to the high at the beginning of January, we had a good reference that the price once again was pulled back at the end of April. It worked quite well. Right now we had a break of this trend while staying between the wider range. But you can see who has joined at the beginning would have heard what I said before. Hi to Maini. Yeah, GPP Yossi. They will go on in a while. You don't like majors, eh, guys? You prefer a lot of currency from the boreal hemisphere. Okay, it's nice. What I was saying. I named the fact that it's always good to wait for the end of the day, before taking a decision, and to see if the price is able to stay above or below some levels. So here, in respect of what I have here like a downtrend, we actually had what it looked like a break and pushed the price higher to almost to 0.64, to that higher bound of a range. But after some day, the price did not succeed in staying above it. We had after the first close above this trend, we had a very positive day. Since then, a lot of negative days, and we are once again below this trend. We are in the middle. We are in the middle of nowhere right now. Okay, because as said, 0.61 to 0.63 and 3/4 have been the broader range since January, quite clear since February. Sorry. Quite clear, and right now we are at 62, right in the middle. Okay, with RSI at 50, marked with Instagram going, with Instagram having crossed to the downside, but still positive, marked overall. So very undecisive moment right now. What we can trade here on the very short term, the reference of this downtrend and the moving averages here. Okay, here's the price right now is just above the 200 moving average. Here is 50. Okay, so yeah, 0.62. If we wanted to consider this trend line, 0.62 and a half must be monitored. If the price gets to this level, would be a very nice entry point. As for now, very recently, it has rebounded from the 50 moving average. So 0.6170 to 0.62 and a half the movement, the levels to take a look at in the short term. Now, switching to the 1 hour. To now we could have some better references probably for a more short-term trading experience. And yeah, this seems to suggest us that yeah, we could have a further push to 0.62 and a half during the next hours. Right, but before, as said, we have a middle of range with neutral indicators, so taking a clear directional trade right now is difficult. I would skip, to be honest, one currency, one pair like this one at this moment, because it's quite congested with a lot of false signals, false breaks. So yeah, this is what I have to say about this wonderful pair. GPP odd. Let me just because we have been seeing the weakness both of euro, of sterling, also New Zealand for some sessions now, and this is finally a consequence of the strength of the dollar in the most recent sessions. The dollar has arrived to this support after having broken to the downside its lows for 2023, because it has been for months an interesting area between 170 and 101.25, something like this. It has broken recently, but at the following minor support area, you see this past congestion, well, well back in the past, 2020, but also while pushing high in 2021, the price has taken a stop in this 99.20 area. Okay, this time after breaking to the downside, the dollar is rebounding there at 99.20. As said, this is not a major support or resistance level. In this case, support. In this case, support. But it's not even not to be considered, because you see the congestion here in 2022, here in 2020. Also the difficulty that late 2090 has encountered going above this level 99.20. All right. So just most probably for a technical reason, it had get very close to an oversold area. You see that me, strangely enough, and differently from other people, I just tend to push a little bit higher the overbought level of RSI to 73, a little bit lower, lower point to 27. Just not to be too impulsive, let's say. Anyway, technical reasons probably. Somebody could call it also a retest after the break. Yeah, or not. And actually, it has stopped 101 and 40. 101 and 40. You see, previously I said 101.25. 101 and 40 is more correct, probably. You see the importance of 101 and 40. So now we have three levels to look, for example, dollar index. And dollar index is very interesting also for getting the strength of a king of a currency against all of the others. Okay, if dollar is gonna looks like it's gonna appreciate, it's gonna do it well, not against all the other currencies, but yes, against many of them. So the levels 101.40. 175, I would say, with a minor level 2 monitor 140, and then 99.20 once again. What we can do here, I don't have it directly in this chart, I have it in another one, is to put this into a channel. Because you see, at some point after the drop at the end of 2022, it started to slow down the depreciation of the dollar. Put it into this channel, and you see that we could even see, even if where we are right now, it will be a very important zone, because it has been low for a long time this year. But yeah, there could be some more room to the upside without this meaning that the downtrend for the dollar is ended. Here we have the moving average long term 250 that are sloping downward. We have this more clear, simple, easy downtrend trend line. Sorry, that is right now passing close to the 50 moving average, and probably if price will get there, also the 200 will be very close to that. 102, 102.30. It's 1.5% possibility of an appreciation, while the trend is still clearly, obviously negative. But yeah, anyway, before going there, let's look very closely to 101 and 40, okay, and 108 and 70, no 75. All right. Now GBP Aussie. Let's have a look to GBP Aussie. I should have it here somewhere among the secondary the secondary pairs, crosses, maybe. Well, doesn't look like that. So okay, let me pam. Let me add it. Let me add it and have a look at that. GPP also. First, I want to do also another thing with you very fast. Let me check. Now I'll drag this what I'm searching to the screen you are seeing. Where is it? Where is it gone? Okay. The window, chat window, templates, ping pong pam. Daily. Let's start with the daily. No, I haven't had. Well, this is what I wanted to show you. Okay, this is the Observatory of Economic Complexity, a website that was initiated by as a PhD project from MIT student, and it is really nice tracking the trade among countries. Okay, this is Australia. This is Australia. Why? Why I get it into here? To see the trade relations between Australia and UK. All right. You see the exports from Australia to UK in 2021. This is old because okay, 2022 you have to enter the area. Has been less than 1%. Where are your import? Where are imports? Okay, imports are here. The imports from UK has been around 227%. Right. What does this mean? All of this, that the trading relations are poor. How does this relate to the currency? Okay, despite trading currencies on a platform, the fact is that you need the foreign currency when you're trading, when you have commercial relations. Okay, so the bigger the relations among the countries, the most traded that carries, that pair, that cross, however you want to call it, the most liquid it is, the more sense has to me to trade. But yeah. So as you can see, I didn't have this tracked. Let me check very fast, so you will see as well as fast how the work I try to do, at least just on a technical basis, on every currency. Okay, first of all, look, I will even start with a weekly. Why? Because it's always very interesting to have a broader view. Somebody call it fractal. Yes, I call it this way as well, by the way. So very long term in the last 10 years has been compressed in a triangle. No. Give me a second. I want to change this color to the GBP Aussie. That's it. With some lows at 160 that have been recently retested, quite recently, some 2022. I wanted to have this level into my chart. It's an important level. It has been important since the beginning of the last decade, in the mid of the last decade. And look at it, while sterling was depreciating last year, it went so low against Aussie as for testing it again. Okay. On the upper side, 193. Let me keep on being a little approximative, but I explained you why. We are looking at a lot of different things and so on. Okay, 193. It's quite an important decisive resistance. Here we are on the weekly. All right. The next one that I will well, if this stuff is able to move, yeah. Venezuela is close to 2. Okay, so 193 is an interesting, strong resistance, and that is very close to where we are trading. It is very close to where we are trading. Okay, inflation apparently is going down. Sterling has been penalized, has been hit by this during the last couple of weeks. Today, it has been last night. It has been the case for the Australian economy, for the Aussie, no? with subdued inflation, and also for projection. I think Goldman Sachs just went out earlier today with the idea that the terminal rate will be at 4.6, and the previous idea was 4.8, 465 probably to 4.8. But yes, what to say? Buying close to an important resistant level on the long term could be quite risky, Also because why I do these things? Okay, look, trend line could be this way or this way. Why this way or the other one? According, if you just want to consider the high, the very high, or maybe you want to consider the close of a week. All right, but let's switch back. What does this mean? That on the longer term, I will be very cautious in. I will be very cautious in buying this pair, even if the trend, the last trend, the one that has been lasting during the last 10 months is clearly positive, is to the upside. It's also clear that we had a slowdown on it. RSI is diverging, marked. One of my streams is having connection issue. We're trying to restore the connection. Okay, this must not be related to you guys. At least, guys, Madame and Monsieur, better said. So, the daily, I would keep under my mind about the weakening of the trend. The trend is to the upside, but it's clearly a weakening. How much I hate it. I hate these kind of things. Let's track this weakening of the trend into this less steepened channel. Okay, right now, going to the very short term, it has rebounded on the trend line. It's rebounding today into the trend line. It could have, we are 191 and 35. There could be room. There could be some room north. That could get us to 192.30. This is almost one big figure, one handle above of this, so it's 0.5%, not that much, 0.55 probably, or even a little bit higher. Okay, I would not even be surprised if, considering that Bank of England is next week, we could even go and retest 193 and 50 during the next day. But on the longer term, I would be very careful going long on this pair. Very careful going long on this pair. Sterling has overperformed this year on the sticky inflation, higher than everywhere else in the developed markets. Also earnings, the money people is earning after bonuses. It's going higher, has been going higher. I mean, could the best in the short term could have already gone for sterling, but we will need to see next data. Remember the target. The target would for Bank of England, also for politicians, the announced target was of a halving of inflation down to 5%. We are still close to 8%. So this as our time is about to come to an end, let me just move. Okay, we haven't talked at all about indices, but yeah, sorry, I followed the questions. Remember that tonight there is we have talked about some about stocks, we have seen the huge performance. We have seen like how the expected opens after the earnings. Implied volatility should open in some cases very close, like Microsoft and Meta, very close or below the steepest trend line. But anyway, I wanted to go very fast. Okay, on commodity we have only oil here to show you. Oil strong, oil very strong, has broken the previous trend line and has come back. Is pushing once again into the previous range, the last range of the last months. Since April has been 67.5, 73 and a quarter. We are back to the last winter range between 73 and 82, above all of the moving averages, long-term moving averages, and now 250. Indicators positive and not overbought. I think there's scope for a further increase of price up to 82. All right. It's by the way, okay, it's supported by oil plus. By the way, you know the fact probably of the sanction against Russia, the cap, also the Russian oil is trading above the cap, has been trading above the cap for 10 days now, for more than 10 days. Okay, leave apart the political consequences of this, but it means that probably the production measures taken by OPEC Plus for getting richer, for selling the product to a higher price, slowly starting to work. So yes, just a couple of minutes. I see right now we have finished with the question. Okay, so as we haven't had a look at them, let's go very fast to see a couple of indices. But before that, as Fed is tonight, what we're expecting from Fed? 98.9% of probabilities of hike to the range 525 to 550%. What is gonna happen next? Market is still not clearly pricing at all another move. These are euro dollar futures. They are named, right? They're listed at CME for institutional investors. Let's say it's not priced in another hike after this. Also, September, a big majority of the bets, 80% are for rates staying there. But yeah, looks like we are close to the end of the cycle. But this thing change. This is not truth. Tomorrow it could be different. But to have a look to what professional traders are thinking about. Pay attention to what Jerome Powell will say tonight. Indices. And then we are done for the day, also because I cannot see a question. So indices very fast. Well, what to tell? Okay, this is the Japanese Nikkei stuck close to 43 years high. Wow, we haven't looked neither the dollar yen. Well, let me go back 1 second. The yen has started again a couple of weeks ago, fell last week when I mean, there's a lot of talk about a change in the policy of the Bank of Japan. Bank of Japan on Friday. Don't forget it. About switch of yield curve control. I'm on the side that they won't switch at all, that it does not make sense. But they have a minus 0.1 interest rate, so eventually, I don't know why they don't raise it. Well, it will be a big favor to foreigners, to be honest, because the short end, the bills are more than 50% in hands of foreign investors. Yeah, uptrend. You see the uptrend rebound on the trend line. Is structurally weak. Yeah. Now back to indices. Before saying goodbye, US ones are close to agreement higher. Volatility is getting really low. I think VIX is close to 15. Where is VIX? Let me check. Here it is. Yeah. Yes, 1526. This gap is very low to new contract. US indices are between 4% and 7% from their all-time highs. Okay, 7% in the case of the Nasdaq, despite of its rally. They are stretched, but not that much. I mean, but the momentum is stronger. The momentum is still clearly stronger because also an indicator like RSI is not showing any divergence. Okay, here SP500 is trading above this quite clear channel, and even if we had a pullback, nothing dramatic. The steepest trend would not be in danger, at least for 120. No, for $100. $100 below where we're trading right now. So we're talking about 2.2%, something like this. All right, and before that, for example, in SP500, we have 4,500, 33, 30, let's say, level that will work like a short-term resistance. Here you can see it in the 1 hour. No, maybe for whoever is trading short-term, it's closer. Look at here, the spike here before getting rejected, and then the floor during the floor this week. At for 5,300. Dow Jones. Dow Jones 12 in a row days up. It's one of the longest winning streak that it had in years. Right now, I mean, it's increasing every day. So I was left in I'm left with the longest streak in since 2016, 17. Maybe it has breached this record with this new. Yesterday was almost flat, plus 0.08%, I think it was, but yeah. Nasdaq is a little bit behind in terms of distance from the all-time highs, almost 7%. Once again, here eventually you can see some similarity with what happens with stocks, what we checked at the beginning. Still respecting trading above a very steep trend line. Okay, but let's see what J. Powell will tell, especially tonight, could move not only the dollar but also stocks. I doubt he will be particularly. Thank you to Maini. Thank you for joining us. Thank you to all of you for your interest and for joining us. And Well, I'll show you your name. Here you are, Tumaini Munen. And I doubt he will be particularly hawkish and dovish. He will be very equilibrated, like it has been. He will weight very, very well his words, like he has always been. So yeah, as we have seen SP500 finding that 4,635 level as a floor, short-term floor of one of this week, 4,500, sorry, 35. That's that short-term floor. Let's have a look. Nasdaq. Let's give some short-term references. Short-term references. Here is once again the floor this week. 15,400. 15,400. Right now we are at 50,515. So the floor is less than 1% away. Volatility has been ridiculous this week on USD. This is why waiting for the Fed. To the upside, weekly, we have had this 15,600-ish, 650, we could even say, resistance. There's this potential short-term trend line passing a little bit lower. Anyway, just during the conference because the interest rate want to move a lot of things. Because it's much expected. During the conference, expect also disordered movements that could easily go above this trend line or below this floor very fast before getting back to where all started at the same speed, aka very fast. So take care, pay attention tonight with Fed, pay attention tomorrow with VCB. I told you, could be interesting because VCB is half trapped. Economic situation is starting to be heavy in Europe, according to data at least. And Bank of Japan on Friday. Keep on going with earnings this week. Let me just give you a couple of names reported. We already talked about the more immediate ones. AT&T, Boeing, Coca-Cola, Meta. Tonight, AT&T, all the first three I said probably have already reported what I was speaking. Meta tonight, big implied move as expected, 8%. Tomorrow, before the open, McDonald's, MasterCard. That's it. After the close, Ford, Intel, Roku. Well, leave Roku away. Friday, the oil companies, ExxonMobil, Chevron, but also P&G, consumers are doing well, leave it. And AstraZeneca, pharmaceutical. By the way, overall, in the earnings season, earnings are beating. Till now, we are 70%, okay, changing every day, but 76% have beaten till now, but the bar was low. The overall EPS is expected to during this quarter to be down 7.1% for SP500, especially on the oil sector. The expectation are incredibly low. The expectation are a fall of almost 50%. Okay, so well, on Friday you have oil companies. Expectations are very low. Prices going up, okay, but the prices going up will not be reflected in today's this quarter results. And guys, madame, monsieur, signore, signore, and whatever each other language I cannot speak. Stay safe. Thank you very much for joining us. Hope it has been useful somehow. And next week, you will stay with my dear colleague Andrea, and that's all. Talk to you. See you soon tomorrow with Instagram. If you want to follow us on Instagram, it will be shorter, but maybe we could speak. Andrea will speak about the reaction of Fed, because ECB. Well, yeah, ECB it will be exactly at that time. At that time, 10 o'clock UCT or GMT or 11 BST. Thank you very much for your time, and yeah, may the peace be with you. Bye bye. Ciao, ciao.